Stock of the day, high profile, not terribly great performer on the market since it floated. McGrath Holdings, Sydney real estate operator John McGrath, his listed company, is in talks to sell the listed agency to global property giant Knight Frank Bayliss. Under the deal, McGrath shareholders will have the option to receive 60 cents cash per share, or an unlisted scrip alternative in sort of, they're going to take it private, so you can stay part of the private group, or a combination of both. If successful, it will mark the end of McGrath being a listed ASX company. Share price currently up 20% today, basically close to the offer price of 60 cents. John McGrath said he's going to convert his shares into shares in the private company. Shawn, if you're a long-suffering McGrath shareholder, what should you do?
I'm not, fortunately.
Yep.
I didn't know what the stock was going to be today, but look, we've never traded McGrath.
Yep.
Fortunately, never been invested in it. My gut feel says take the money.
Yep.
And step aside and look elsewhere. There's plenty of good opportunities out there. I'm not a huge fan of going off market. I'd rather have something that's liquid. I can see what it's trading. It's more transparent.
Yeah.
That's my personal ethos. Not everyone would agree with that.
It floated with a blaze of glory, didn't it? When was it? About 4 years ago?
4 or 5 years ago. I'd hate to think what the capital depreciation has been over that time.
Yeah.
Your chart doesn't go back that far, but it's going to be one-way traffic.
Yeah, exactly.
Like a ski slope.
So take your money and run.
I would, but I haven't researched it in great depth. It's not a stock we've traded or owned.
Luke?
We don't own it. Never really spent a lot of time looking at it until today or this morning when you sent me the email. But I think it's a business that's sort of like stockbroking or these businesses where the goodwill in the company goes up and down the lift every day. It's with the people that work there. It's not so much the brand.
Yep.
And I think as a result, they're generally far better private companies than they are public.
Yeah. You make an interesting point with a lot of financial groups who've been taken over in the past, and then you see a mass exodus of all their biggest producers, and it's a reminder that yes, they might be a listed company, but they're depending on really high revenue producers to deliver their bottom line, aren't they?
Yeah, for sure. I think like the legal industry is another good example where we've tried over the years to have listed partnerships. They just don't work, whether it's consulting, financial services or legal. I just like a partnership model in a private sort of arrangement, for lack of a better word. And I think, for the Knight Group here, the buyer, they're going to be probably doing really well out of this because it's cheap assets, it's a cheap business, probably decent cash flow, but probably just not the right place for it, the ASX, in my view.
Yep. I'd even throw the key man risk in with fund managers, which is the first subject we're talking about today. First stock, if the people at the top giving you the correct pointy end returns leave, what's left?
Yeah. As we've seen with some high-profile fund managers, exactly.